Good morning, traders. Thanks again for tuning in to another stream here today. So, going to jump right into it this morning. A couple things on watch. Tesla for one, and pretty much all the earnings plays I see are, worth mentioning today. So we have Foot Locker. I mean, we could just start here. Foot Locker has an earnings report came out, gapping down from 53 to 47. So losing about $6 a share overnight, kind of gapping down, fading into this low point. So initially going to watch the stock short bias unless it starts to hold support here at the pre-market low level. Then I might watch it for a reverse spike to the upside. Okay. It does look like Foot Locker did, reaffirm their forward or 2019 guidance going forward. Nonetheless, going to be keeping an eye on Foot Locker here at long bias if the short play fails, okay? So it is down quite a bit, and it did gap down right into support as earnings plays always do. So we do have a nice gap down right into support. So again, if it fails the short move, then I'll look for a dip buy. And it's already forming into a long pattern pre-market. Because as soon as the price action basically gets over this trend line, if it does, it's going to cause a push to the upside. Most oftentimes, when you have a price go down, bounce, fade, break trend, it squeezes. So that might, in fact, just happen here very shortly pre-market. Okay. So anyways, keeping an eye on Foot Locker today. Next one is ADSK. ADSK is an earnings play. You will have to be careful on this one if you do trade it. It tends to have a spread of, close to $1 sometimes, if not more. So it's going to be a volatile stock. It can be, not going to say it will be, but it can be very volatile. The spread can get very big, very challenging. So you can make a lot of money and you can lose a lot of money. So definitely be careful with this one if you do go about trading it. Really, their earnings report wasn't all that bad. I think they missed sales by a little bit, or made a smaller loss. I can't remember exactly off the top of my head. I'll have to reread it, but it really wasn't that bad of an earnings report. Maybe down a slight bit on revenue. Let's see. Yeah, I think they're down on earnings a little bit. So nonetheless, I mean, it really wasn't a terrible earnings report, but the stock is still gapping down. So again, I usually are going to follow this short bias until the short fails and it says that it wants to be a long. So that's how I'm going to go about ADSK, is initially really watching it short. Now, I could be like, well, get short below the pre-market low, but that's too obvious. Get short below 151, but that's too obvious. The short play is most likely going to start developing and forming. Somewhere around, if it just stays here, if price action just stays at 156, then the short play is going to start developing around 156, and ideally you'd want to be in before the low here at 153, because that's a bounce level. So if you're shorting at 153, you're basically shorting into a bounce zone. If you're short at 151, you're basically shorting at support. So ideally, your short play is going to start developing in here. If there is one, it's going to start developing probably, 156, 155, maybe a little above 154, where you're looking for the move below 153 into 151, 150s area. So again, keeping a slight eye on ADSK today. Okay. Mr. Hawthorne, I don't really mess around with oil nor keep a very close look on it, so I don't have a ton of information for you there. Yep. You're absolutely right, Mr. B Custom. Today is Friday, holiday weekend. I really don't intend to trade very long today. I'm probably gonna trade till about 10:30. I usually want to trade till about 11. Give myself that additional 30 minutes after 10:30 to see if something starts moving. But today's Friday. It's a holiday weekend. I already got a tee time today for like 12 o'clock to play golf. So yeah, I'm gonna be cranking some brewskis today, enjoying myself for the early weekend. You should do the same. All right, so let's get into the next one here. Next one is Tesla. Now, this one it's interesting. There's a little bit of hope behind it. I will say that. because the formation isn't all that great this morning. We kind of gapped up. We rolled over really significantly. If we gapped up and just held, right? If we would have just held and went sideways like this, I would be all over it. But we didn't. We kind of gapped up today, rolled over. But nonetheless, in the short-term perspective, Tesla is in fact uptrending a little bit. We had a mega short squeeze yesterday off the 180 level. I'm not going to be like, hey guys, look, I called the squeeze, around 180. The whole world knew Tesla. I mean, it was just too obvious. I even said it was. Okay, I will give myself credit on this, that it basically exactly what I did say was going to happen, and same with everybody else, was the 180. I mean, everybody was paying attention to like this absolute low point here at 180, like that's where it's going to bounce. And I'm like, no. Like, well, yeah, it could, but there's a strong chance we would see it either below 180 or just above 180, because 180 is too obvious, right? That was way too obvious of a level. So when things are too obvious, then things usually don't do that. They usually do very close to that, but they'll do something like bounce at 182, right? And that's what we started to see. We started seeing a mega short squeeze off of 182 yesterday. So I'm not going to call myself a genius. The whole world knew Tesla was bound for a bounce and a squeeze. So, if you called the 180 bounce, don't applaud yourself that much, because it was pretty much plain as day. But we did squeeze, right? We went through a big bounce yesterday, couldn't break highs, gapping up a little bit today, but rolling over. I would still be long bias on this initially. I would still be long bias. I don't think there's any reason to particularly be short right away because of the strong bouncing we're starting to see. So initially I would be long bias, then I would be short bias if the long fails. Francis Q, is it good to buy Roku now? Maybe, maybe not, but Roku is trending. It is into all-time highs, and it's starting to form the bullish movement, where there might be like a slight little gap down or slight gap up, pulls back, and then it runs on the day, right? It's starting to do the bullish trending trading formation. So I would be more long bias the stock right now than I would be short bias, until Roku actually puts in a significant extension leg, which basically means until the stock makes a big move up and becomes overextended. I wouldn't really want to be a seller on it. We already moved up on the market today. But yeah, this is what I was kind of mentioning to our group yesterday, that I would anticipate that the market either has a gap up or, a little bit more of a bullish day. So far, the market's doing exactly what it should be doing. We mentioned this, if anybody remembers from the past, actually, yeah, if anybody really remembers from probably last week, I said, do expect that the market's going to trade within the channel from like 290 to the lows of 279. And that's what we're doing. We're trading within this channel right now, right? We're doing the consolidational channel trading, right? This move right here, well, actually, so it was like this. Excuse me, let me redo this. Okay, so the channel high-low was from 279 to basically like 290s, like right here, okay? Let me get my drawing tool on the market. So this was like the channel, right, from 279 to 289, right? And then the market kind of rolls over. We bounce. We hit resistance here, roll over. Now the channel is from 279 to 286. And as we bounce again here, right, maybe bounce today, maybe try to hold up on Monday here. If it rolls over again, then the channel now would move from there to like right here. And then you'll have a smaller channel. And as the price action and the channel becomes smaller every time, the stock becomes, or not stock, but it's the ETF, sorry, it's the SPY. But as the SPY becomes more consolidated and more crunched into a smaller channel, then the likelihood of a breakdown or breakout to the upside becomes more relevant or more prominent, okay? You don't get breakouts and you don't get breakdowns when there is a big range in place. Remember, you only get breakdowns and breakouts after a time of tight consolidational range-bound trading, right? So if you look back, again, 279 to basically 290, right? We'll say 290. That's not a tight range. That's a 10-point range on the market. That's big, right? 279 to 286, that's still a big range. That's a 7-point range, okay? 279 now to 283, that's starting to become a tight range because on average, the market sees an average true range of probably about $2 to $3 a share. So as soon as this range becomes the same, if not smaller than the average true range, now you're looking at breakouts or breakdowns. So we got another couple days probably of trading into next week before we see a breakout or a breakdown. So the way this looks right now is, that is the same chart, yeah. The way this kind of looks now is basically, this is what's going to happen. I can basically, I'm pretty sure I could. So, right, we have a trend going down this way like so, and we held support to the side off of the triple top, and right, so we kind of, if you come down, ready, da 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 da, boom, bang, right there, off the triple tops, into the dip zone and break out there, bounce, bounce. So now there's two ways to look at it. There actually is really only one way to look at it. This is support, descending, right? This is a downward move, bounce, lower high, down, bounce. This actually creates a small higher low right here. So there is a small wedge development in place, while at the same time, many could argue that we're starting a descending triangle formation. But right now, the overall sentiment in this play is still bearish, right? Because we're pressing lower off these moves. And so do expect that by, this is 524. So if we pull up this, let's see, 29th would be next week, Wednesday, 30th would be Thursday, 31st is Friday. So the 29th, 30th, 31st. So do expect by the end of next week, maybe going into the following week, we're going to see the markets either break down a new leg or we're going to see it start pushing back to the upside. So I say we got about another week of trading in here before market really makes a decision whether to go back up or down. Okay. Yeah, Mr. Yeah, exactly. Yep, you're absolutely right. That's why many of us trade kind of the wedge developments because there's usually an aggressive move afterwards. Yeah, there you go, ladies and gentlemen. That is the market. If we want to touch more, again, here's another way to look at it. And I don't care if you're long bias the market. I don't care if you're short bias the market. At the end of the day, this is just what I'm pointing out. And the market's really not hardly breaking into new highs. Okay, so if you'd read the news and if you go into a lot of Facebook groups and different places, and I respect everybody's opinion, I really do. Unless it's completely outrageous, then it's like, okay, shut the hell up. But I generally respect most people's opinions, so I'm just going to give mine here, right? If you look at the market, something we see a lot of times in the news and even in different chat rooms or, Facebook groups is that people are like, hey, the economy's strong, which it is, and things are going well, and the market's killing it, and the market's up, the market's up like 30% this year, 26%, or whatever the hell it's up, right? I could find out, but they'll say, hey, market's up this much percent. Like, yeah, that's great, but the market's really negative since our first scare of market crash, Okay. So I like to think things a little bit differently and a little inverse than most, right? Most would go, hey, look, for 2019, the market's killing it. True, it really is. But from our first scare, which is right here, from the first scare in the market, right, which was back in the beginning of 2017, the market's actually negative. The market is currently below or red from our first initial down-dropping scare in the market, and that was from almost 2 years ago, 1.5 maybe, close to. So for 1.5 years, the market has made zero gains from our initial top or scare of a market crash. And we have pressed into new highs, so this is like a little 5-year-old kid going to the pool for the first time, dips his foot in the water, goes, holy shit, that's freezing, I'm not going swimming, right? And then he's like, okay, let's try this again. Comes back up, puts his foot in the water, goes, holy shit, it's still freezing cold, I'm not going swimming. And he comes back down. Okay? So, again, we could press into new highs, but so far, what this market is telling us is it does not like new highs yet. It really doesn't. So, I am still more bearish than I would be bullish, right? Because the only thing the market is telling us so far is that it doesn't like all-time highs right now. It really doesn't. It's not respecting them. It's selling off basically instantly. And we still have bearish divergence in effect for the market. Let me pull this down. And what time is it? 8:51. We got a couple minutes here. All right, if we, Jesus, come on, work. There we go. So there was a very clear-cut, this is annoying. Hold on one second. I got to take these off. Actually, I can just take off the MACD. I hardly use it. I don't need that. There we go. That'll help. Okay, so there was a clear-cut divergence the first time, right, from here to here. Really big. Just plain as day. Okay. This time, there's another one, but it's not quite as big. Right? It's almost even. It's slightly down, so it's very arguable that you can even call it. I mean, it is a divergence because, this is on the downward trend, whereas this is still kind of upwards by a bit. So there's a small one, but not enough to make me go like, oh shit, right? So nonetheless, even if we take a step back and redo this, the market's been trying to press into new highs and trying to trend up while all the momentum in the market's starting to trend down, right? That's what we call bearish divergence, right? Where the market or a stock or an ETF or a security or some type of financial instrument, I said financial, weird, financial, where some financial instrument is trying to move up, price action of the instrument is moving up, while some type of indicator is stating the opposite. We have here financial instrument, underlying security, the ETF, the SPDR S&P 500 Trust ETF is trying to push higher. Directionally, price action-wise, it's trying to push and trying to go up, while its indicator or relative strength index, momentum indicator is stating otherwise. Momentum indicator is saying, hey, the momentum is dying down. Okay? It's very hard for a car, a motor vehicle, something with a motor that uses gas, right? We've all driven one of those. It's really hard for a car to keep going forward or to keep moving without your foot on the gas pedal or without any gas in the car. So without anything there or anything to give it momentum, it's not going to go there. It's actually going to stop, right? Luckily for you and for me, once the gas runs out, we don't go in reverse, right? It just stops. But in things like financial instruments, when the momentum stops, there's no more gas in the tank to continue pushing it in one direction or the other, it usually means it's going to reverse, right? So this here is starting to tell us that the gas tank is running low so far. We might hit a gas station, right? There might be a catalyst right around the corner. We don't know, right? We're on Route 66. We're in the middle of the desert. Who knows? We don't have GPS. We don't even got a map. There might be a gas station down the road. So what does that gas station look like in the market? The gas station looks like China and Trump, they quit doing the trade war and everything goes back to normal, and Trump takes off the tariffs and China takes off the tariffs, and it's back to business as usual. That's a gasoline gas tank filling catalyst for the market that could give us that next push up that could change the whole dynamic of the market. But as for now, what we're looking at is we're on a road trip right now. We've been here for a year. We're running out of gas, and really there's no light at the end of the tunnel right now. And that's the way I see that, okay? So again, there's a whole spiel on the market for you guys right now. And my my outlook hasn't changed. As soon as we got this very bearish drop in the beginning of 2007, I mean, we already knew we were high. I already knew we were high in the market. But once we got the first sign of bearish scare, I'm like, okay, we're getting to a top. Because this move right here down, this is the same type of formation you see in all stocks that are hitting tops, right? This really sharp aggressive down, followed by a bounce, followed by a sharp aggressive down. That's a topping formation that almost all stocks see when they're in bubbles or they're in tops or they're at their top. So as soon as I see that, I'm like, well, market's most likely topping out, right? And sure, we go up here, looks great. Then we come down here and we go up here. I mean, just because we crash and just because we bounce doesn't mean that things are back to normal. I mean, market's still pretty scary to me. All right, so yeah. So with that being said, guys, I'm going to call it there. I'm going to get back to our private group. I think I made like $370 trading yesterday. I had to do a recap. Some days I'll do them. So, and generally speaking, the days where I don't do recaps, it's because I just generally am busy working on something else, and or the trading day was primarily just some smaller scalp trades that I just, if we went over them, it would be so fast, high paced that it, again. So yesterday was a nice little green day of like $300, $350, $370, something like that. So anyways, hopefully everybody has a green day, keeps their wins under control, keeps their losses under control. And I will see you guys on not Monday, but on Tuesday. Markets close Monday. I'll see you guys on Tuesday. All right, everybody take care and have a good weekend.